It's Monday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a Rail and Intermodal update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday Carrier Update presented by PowerFleet. I'm Zach Strickland. So we're continuing to see volumes increase. We got a little bit of a touch of a retraction in the tender rejection index for the United States, bouncing down to 24.35%. Not a huge dip by any means. We saw some of these contractions, just over a week ago. Not a lot to be alarmed about or anything concerned about, or even thinking that we're seeing a significant change of direction. With volumes going up and continuing to increase, the tender volumes that is, as they're continuing to increase, that's going to keep pressure on the tender rejection index for the foreseeable future. Even as tender volumes, even if they go through some sort of contraction, it's going to take a while to get things back and settled like they were before. So for the moment, a little bit of a contraction in the tender rejection index over the weekend. Not a lot to think about just yet. Especially as volumes, the tender volume index continues to increase well above 15K and continues to climb throughout the last, a long period of time. So we've got a couple of storms in the Gulf of Mexico, as most everybody knows by now. You've got Marco sitting up here around Louisiana, and Laura. The interesting thing about this is that it's going to, their paths are forecast to almost diverge right around the Louisiana coastline, hitting Houston and New Orleans markets. So right in there, again, for freight markets, the concern isn't necessarily that it's going to disrupt a ton of freight patterns, but if there is significant damage, that means that's going to draw a lot of capacity down into those markets as the recovery efforts, depending on the level of recovery that is. If they do go into the areas that they're expected to hit right now, it doesn't look like it's highly populated, not a lot of infrastructure in place right there. New Orleans, not going to get as much of an impact from Laura as it would potentially from Marco right now. And again, the threat largely due to flooding and storm surge and all that kind of stuff. So Marco, we're going to be watching. It's going to hit and kind of grind along the coast, according to our forecast here, along the Gulf Coast, hitting and landfalling right around Houston. Could potentially sit there for a minute and spin, which is exactly what Harvey did a few years back and really caused a lot of disruption and damage. So, and then Laura right behind it here in a few days, supposed to hit right around, the middle between New Orleans and Houston, but time will tell on that. So looking at what type of freight markets are we talking about impacting? So like I said, they're going to draw a lot of capacity if there's significant damage or, FEMA efforts, et cetera, recovery efforts. But there's also that idea that these markets have volume already in them, and what kind of disruption is that going to have? Houston, of course, one of the biggest markets in the United States, 2.357% total outbound volume market share. And then you add that up with New Orleans and Mobile, and you've got about 3.25% of the total outbound freight volume in the United States right now, and both of them are actually, relatively strong in terms of overall volume. Looking at the, breakdown of tender rejections, have we seen any disruption just yet? Has anybody really gone out there and started rejecting loads in anticipation of this? New Orleans, hard to tell the difference between tender rejections because of a storm or because of just simple volume growth. The volume growth there in the blue line, the outbound tender, the orange line, the outbound tender volume index in the orange line there continues to surge. Tender rejection rates in the blue line continue to grow. We did see a little bit of a contraction last week, but they are popping up and they are still relatively high, up over 29%. Houston, however, we are not seeing any significant change in that outbound tender rejection index. Volumes continue to be relatively strong out of Houston, but capacity is, for the moment, still relatively consistent at about 15%. Time will tell, again, as these storms get closer. Maybe tomorrow we're going to check on the tender rejection rate for all these markets and see if we're seeing any kind of disruption just yet. Volumes not necessarily at risk at the moment, but they do continue to grow. Long haul and mid haul and tweener all showing significant rejection rate growth in the New Orleans market too. So anybody looking to get out of that market should have a relative ease on the spot market for loads over about 450 miles. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
The latest is the sonar chart that stands out the most to me currently is this maritime import shipments index. So we see here in blue, these are the maritime import shipments this year, and we see it's been a really unusual year. It declined earlier than usual in February, stayed low with the COVID situation. We had this big spike in May, and then it was less than last year during June and July, and now we're way above where we would typically be in late August. So this is a daily series, and we're about 20% higher than where we would typically be at this time of the year. So what we think is happening is there's been a pull forward in the peak season for imports. There's just a lot of uncertainty in terms of can you get those goods into the country? The steamship companies cutting back too much on capacity, all of those issues, tariffs, who knows what happens there. So, the idea is get the goods into the U.S., have them close to the consumption centers. That's going to make it easy to get, to where they need to be for Christmas and those things. From there, what stands out is if you compare LA to the country as a whole, and you can see that LA has really outperformed over the last year. So I'm comparing this to 1 year ago. So the country as a whole up 19% in terms of imports in the latest data point. LA up 44%. So there's a lot of congestion right now in and around the ports just because there's a tremendous amount of volume. And the reason LA has become more preferred versus other ports is it's a relatively short sailing time from China, our largest trading partner, and you can get those goods faster to the warehouses or wherever they need to be. So it's really been a lot about speed, and we've seen this reflected in the ocean rates. So in orange is China to the west coast, and you've just seen that really shoot up. That's at a record level right now. China to the east coast is in green. That's gone up as well, but hasn't gone up as much. So the important thing is really that spread, the difference between those two rates, and you see how that's usually about $1,300, $1,400 more per 40-foot equivalent unit to take it all the way around to the East Coast. Now it's only $457 more. So that means all in, when you combine the surface transportation, the shippers are paying a premium to move those goods into the West Coast, get them to, say, the Midwest or Eastern consumption centers, those big consumption centers, faster. So they're really paying a premium for that speed to get it to market quickly, get it to where it needs to be. Part of that is the tightness in the trucking market that Zach Strickland was just talking about. We've seen volumes increase overall in intermodal. Even in the intermodal trailers is up over 10%, like we talked about last week. So kind of an unusual situation. And then what's also a little bit unusual is some of these intermodal spot rates. We have a kind of a unique data series in Sonar for intermodal spot rates. And you can see this pattern is the intermodal rates where LA is the origin, LA to Atlanta, LA to Chicago, LA to Dallas, strongly up year over year. Particularly as LA to Atlanta showing $3.88, which you'd swear that was a mistake if it wasn't for the fact that some of the rails are talking about big surcharges to alleviate some of the congestion. BNSF talking about a $1,000 surcharge per container, those type of things. So almost like they're pricing themselves out of the market just to alleviate some of the congestion. So intermodal capacity is tight as it is in truck, particularly from the West Coast.
Awesome, Mike, brilliant. And last question real quick, do you see this pull forward lasting much longer?
I think it'll last a few more weeks, but I would expect later in the year we'll see imports below where they were last couple of years.
Got it. Excellent, Mike. Thanks so much. We appreciate the info, and thank you so much for tuning in. That's going to do for this Rail Intermodal update and wrap it up for this episode of FreightWaves Now. As always, you can check out our app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.